You know what really sucks right now in the economy? Well, there's actually a few things that suck. One of them being China. Despite challenges such as struggling property market and high debt, Chinese stocks are outperforming US stocks, with the China index up 18% this year compared to S&P's 2% gain. Let's be honest, the 2% gain that we have right now is very volatile and many people are down on the stock market this year. Freaking Tesla. Elon, the political Musk, is busy with something other than making money for Tesla. He's very busy in the White House doing political things. And Alex Karp, the man who graduated my high school, he's writing books like The Technological Republic. What about Palantir stock? It was at $125 per share. Now it's at $85 per share. Even less. So we got leaders that are not even paying attention. It seems like Elon Musk, Alex Karp, they're doing other things right now. And as of March 1st, 2025, Palantir stock has experienced a significant pullback, declining approximately 32% from its record high achieved on February 18th. All right, so not that long ago, we were at highs, but all of a sudden we got 2 weeks of the choppiest market I have literally seen. And there's a lot that we need to note here if you want to make money in this market. All right, Dan Ives, he promised an AI revolution where NVIDIA would hit $5 trillion. Yet NVIDIA had earnings, and NVIDIA pulled back, and right now it's not performing super well. This is very disappointing. And in this video, what I want to talk about is how do we survive? How do we thrive? Because I will tell you the other side of the coin, okay? Although there's a lot of trouble in the market, although there's a lot of volatility, the other side of the coin is I've actually done pretty well. I've actually beaten the S&P 500. And guys, it's not to brag. I just want to motivate you to help you realize that although this is some of the toughest times, there are opportunities in the market. There's definitely opportunities in the market to make money. So to understand how do we survive, and more importantly, how do we thrive and make profits in a bearish market, in a volatile market, a market that has turbulence, we need to understand why is the market down. So I'm using my research right now, and the market has had 2 strong years. This is very important. 30% gains in the S&P 500, leading to an overinflation in prices. What we see going on right now, like stocks like Palantir, they skyrocketed. You know, a stock like Palantir went up 20x in 3 years, okay? This signals an overheating in the market. If you've been subscribed to my channel, you know I bought Palantir at IPO. At the IPO date, as soon as it was available, I purchased it. My average cost for Palantir, $21 per share. But the issue is I have experienced a pretty big fall from 125 to 85, but I have not sold. I haven't done anything crazy. I've just stuck to my long-term vision. I did issue a warning on Discord that the market is getting expensive, valuations seem stretched, and stocks are getting expensive. However, even though I issued a warning, I didn't sell at the top. I missed it. And I wouldn't even say I missed it because I'm not a trader. I'm an investor. Okay, so yes, I missed selling Tesla at $480 per share and Palantir at $125. However, because I'm an investor, I have a long-term vision and I remain long-term bullish. And when I'm looking at how to protect myself and thrive in a tough market, I'm looking at using options like protective put options, and I'm looking to create income and wait out the market. And there's 3 specific scenarios that I think are going to happen moving forward, okay? 3 different ones. These are very different ones. The first one, which I think is actually the most likely one, is that we have had a pretty good pullback and we're going to be back to business as usual with the stock market doing very well and having continued growth. In fact, I think we're going to get back to bicep over tricep and glutes for the girls, okay? I think we're going to get back to business. I think things are going to be okay. That's the first scenario. I would probably place over 50% probability on this scenario that, you know, even despite what's going on with tariffs, and which is actually, I think, a net good thing for US, but there's going to be volatility because of it. Despite what we've seen with Zelensky coming to America and having that heated debate with Trump, and Trump says we want peace. Zelensky, not sure. It's a really tough situation. And I'm not sure if we fully understand the whole side. I'm not sure if we're going to get an end to the war right now. So there's going to be more issues within the market. But again, my base case is we're going to get back to growing. The second scenario is we have a major crash. Okay, we have a 30 to 50% market drop. Okay, keep in mind, despite 4 major crashes since 2000, the S&P 500 is still 6x in value. So I'm not here to create some fear, despite the title, you know, just doing what every other YouTuber does. My content remains 100% what I believe in, and I'm a bull. Okay, so I want to point out, even if we get a market crash, 30 to 50%, we're still going to 6x in the next 10 years, okay? So even if we get a huge pullback, we're still going to recover, okay? So while we're pulling back, I would obviously buy. But again, I don't know if we're going to have a market crash. The third scenario, okay, is sideways. Now, I would place probably a decent probability on this one, maybe around 30%, that we've had a huge run-up, we've had a fairly big correction, okay, not a crash, it's a correction, and now we may have some slower growth into the future as companies have to have more earnings to really satisfy investors, because we want more money today, okay? And today the numbers are not supporting the thesis of the market continuing to blow up 20, 30% per year. So investors want to see more earnings growth. They want to see more money. So the third scenario is sideways, low growth market, or a slight bear market. Okay, when I say bear market, it's something like over the next 6 months, we might have a negative 10% return, which would probably put us somewhere in that crash territory, but not an extreme crash, not a 30 to 50% drop, more so 10 to 20%. Keep in mind, using data and logic and statistics, bear markets last approximately 10 months, while bull markets last much, much longer. And also keep in mind, missing the 10 best trading days in the market over 20 years can cut your returns by 50%. I only know one person who is extremely good at timing the market, okay? This is going to be funny and true. Michael Burry, the hedge fund manager who predicted and profited from 2008. But you know what else Michael Burry did? This is going to be funny and shocking. You know what else Michael Burry did? He predicted 2008. Sure, let's give that to him. But Michael Burry also predicted 17 of the last 4 crashes. All right? He predicted 17 of the last 4. That means even the man who predicted 2008 over-predicted so many crashes. Don't be like Michael Burry. Let me give you some more data and perspective and put logic in your corner right now and actually put the bicep back on your arm, okay? A correction or a 10% decline, it happens roughly once every 1 to 2 years on average. They last around 3 to 4 months before recovery. So an example is S&P 500 had 39 corrections from 1950 to 2022, once every 1.8 years. Guys, we've been due for a correction and things have gotten expensive. Doesn't mean we're going to have bad results going into the future. It just means corrections are normal. Now, let's talk about bear markets, because a correction is 10% decline, but a bear market occurs roughly every 5 to 6 years on average. They last 10 months on average, but can extend beyond a year. So the example is 2008 financial crisis, which lasted 17 months, while the 2020 COVID crash lasted only 1 month. So COVID was a very interesting scenario, and that year that COVID happened, I actually took my portfolio to some really big levels. Okay, I had multiple X returns, and 2020 led me to getting 100K, and then 2021 turned 100K into 700K. So bear markets can be a fantastic opportunity for investors. The only thing that we should be concerned about is a crash, which has a small likelihood, but a crash would be 30 to 50% decline. These are very rare. They happen once every decade. Are we in a crash? I really don't think so. 2000 was a dot-com bubble, okay? 2008, Great Recession, because, obviously people that couldn't afford houses took out loans that shouldn't even be given to them, but they took out loans and they couldn't afford these loans. And 2020 COVID crash was negative 34%. And guess what? I went through 2020 COVID crash. Obviously, I was too young for 2008, and I was too young for 2000.com. But let me tell you, the COVID crash was a fantastic opportunity. I was super excited. So here's the key takeaways. Market corrections, 10% are very normal. That's what we're in right now. That's what I believe we're in right now. Bear markets where 20% or down happens very rarely, and I don't think that's where we're at right now. I think there's a lot of money on the sidelines, and investors have nowhere to really park that money. So they're going to be investing in the stock market. It's just going to be a stock picker's market. Rather than investors going for Mag 7, which obviously the entire world is invested in Mag 7, we're going to have more of a stock picker's market where more value stocks are being picked. You can actually see my portfolio is doing pretty good at 4.1.5, which is actually not that far down from the all-time high of 4.4. I'm down only $250,000 on a pretty big size portfolio. And my top pick, which you can kind of see here in somewhat order of my biggest bullishness, is actually been Walmart. And it's been a very big stock picker's market. Although Walmart reported good earnings and the stock went down, I bought more. I had 5,000 shares of Walmart. Now Walmart is a massive position. Okay, but it's not just that. I think Palantir is going to probably bounce back up to $100 per share in 2025. I also want to show you that I'm buying some value stocks. I got XLF, Kraft Heinz, and this is a very safe play. So XLF, I just bought recently, like a couple days ago, and I'm up 2%. Not a lot, right? But in a couple of days, I put a pretty big size of money, 625K. I'm up 11 grand, okay? When the market is shaky, you go for value stocks. You pick your value stocks carefully, and you pick pockets of the economy that still present an opportunity. So even in bear markets, I'm able to make money. It just takes time to adjust to a new strategy and pick better stocks. So here's the conclusion to the video and my personal take, Henry's opinion. For new investors, if you've missed the previous sale in 2020 for COVID times, now is the biggest sale that we see in the market for a very long time. It's a really good buying opportunity. And specifically what I think is going to drive this market in 2025 is the AI explosion, the AI revolution. So AI could contribute to $15.7 trillion to the global economy by 2030. Of course, Microsoft's going to be a big component of that, and they're investing $13 billion in OpenAI. They continue to integrate AI into their ecosystem like Azure and Copilot. Next is NVIDIA. NVIDIA dominates the AI chip market with revenue surging 265% year over year, and this is from the Q4 2024 earnings. So I'm bullish on NVIDIA, I'm bullish on Microsoft, and Amazon also has pulled back to some really good levels where the valuation just makes sense to purchase. AI is driving productivity and earnings. AI-powered automation is projected to increase worker productivity by 40%. That's according to Accenture. I actually worked in consulting for some time, not for Accenture, but that's a good data point to know. AI-driven companies are showing stronger earnings, so NVIDIA's profits surged crazy, like 1.4 billion to 12.3 billion in Q4 2023. So the trajectory of where the stocks have come from has been massive, but what's to come, I believe, is going to be even more massive, because humans, we can't comprehend the linear, like we think linearly, right? We think, okay, things are improving, so we're going to go from X to Y. Well, no, we're not going to go from X to Y. We're going to go from X to Y. Like it's looking like that. If you think about the progress that we made in the past 25 years, from 2000 to 2025, like phones were barely available. Like we had flip phones. Some of the biggest people like Michael Dell and all these CEOs, they didn't think it was possible to even have a communication from one country to the other, right? Because you're in different time zones, etc. We have phones, we have Zoom, we have so much technological progress that more has happened in these 25 years than has ever happened for all of human history. If you think about a caveman, when they discovered fire, it took them thousands of years to make one discovery, fire. Then to control fire, that took them even longer. Starting a fire, controlling it, having it, available to you to fend off animals, etc. This took thousands of years, okay? Even if you look at from 1800 to 1900, the technological progress from that period compared to 1900 to 2000, 1900 to 2000 was like 100x difference, 100x, right? And what I see happening in the future, and I hope, I'm very bullish on the future, I'm optimistic, and I hope that we have lots of different cures to diseases, innovation in technology, AI becomes smarter than humans, and all of this is going to drive money, okay? So whatever happens, the easy prediction is there's going to be a lot of money made. So if you're not invested properly, if you're not picking stocks, if you don't understand the stock market, if you don't understand how to use options to create income, better hope that you have a nice job that pays you 300K, 400K. I hope that you're, making a lot of money, because investing is the only way to actually become free. Like I travel, I do anything I want financially. My life's not perfect, but financially, it's became a millionaire at 26. Again, I'm not bragging. I don't want to make you angry. I'm trying to encourage you and inspire you to get your freaking ass and learn trading, learn investing, learn psychology of the market, learn valuations, learn the stuff that I teach in my Discord community, because it is life-changing stuff. And when bear markets come, when corrections happen, you'll know exactly how to take advantage of them. So you got two choices. You can either get in the game invest and position yourself to make money, or you can sit on the sidelines, cry about missed opportunities, and let the market run without you. So you've got two choices. You can either get in the game, invest, and position yourself to make money, or you can sit on the sidelines, cry about missed opportunities, and let the market run without you when it eventually does. Literally next week, maybe the market rises 3 to 4%. So instead of timing the market, pick good stocks, invest in them, use leap options. Right now it's freaking fantastic time to use leap options, and profit from the fear, because right now there's a lot of fear in the market. If you want help, I am going to be picking value stocks and growth stocks in my Discord community, and I'm doing a lot of research to beat this market, which has been very successful so far, and I'm looking to make 2025 the best year for investing ever. And I still think that's very possible. There's still a lot of time left. So if you're interested in joining me, hit the first link in the description. Either way, I hope that you keep following the videos that I'm putting out, because I am going to make a lot of money. And this short-term correction is not really an issue on the long-term grand scheme of things.